Alright, so I've been asked to talk about crypto, so here goes. It's no secret that crypto has been getting absolutely smashed in the last couple of weeks here. And it's got various experts coming out on TikTok and various other social media platforms drawing charts such as this, trying to identify which way and when it is that crypto is potentially headed. The one thing is for sure that it is very difficult to potentially predict where this thing is going based on some of these technical analysis that a lot of these experts are performing, largely due to the fact that there's a very limited amount of history that is available. But with that said, what we do know is that institutional investor investment in cryptos continues to increase. For example, based on this research done by Galaxy Digital, it does talk about venture capital firms pouring in about $33 billion into startups in the crypto and blockchain technology sector, a figure that has higher than all prior years combined. The paper goes on to talk about the massive amount of dry powder minted at least 47 companies with valuations over $1 billion. And then it goes on to talk about 43% of crypto funding going into companies involved in trading, exchange services, investing, and lending of crypto assets, while 17% was directed towards startups in NFTs, DAOs, Web3, and the metaverse. Now, with this much capital going in this quickly, an argument could be made that it sounds a little bubblicious. Now, before I get a lot of hate around this, the article does start off by saying that institutional investors almost double the amount of money they put into venture capital over the past year. So yes, other startups and stocks for that matter could all appear to be in this bubblicious territory. What this generally means is that some of these adjustments and corrections are generally a good thing and pretty healthy when it comes to these types of markets. What it also means is that, generally speaking, when you have all of this institutional investment going into these crypto related assets, it's good for the future of crypto as well. Therefore, if you are going to buy crypto, it is important to potentially have a very long term time horizon because it should eventually pay off. How high is it going to go and when is it going to get there is obviously very hard to discern, but what is important to know that this is a relatively early stage type of an investment, and over time, as long as you do realize a rate of return, it is not a bad investment. But if you think that growth stocks were risky, this is basically risk on crack. And therefore, if you can't stomach it, you should be cautious about the amount of risk that you're willing to take by potentially putting a limited amount of your portfolio into this type of an asset class. I started off with the notion of 1 or 2% a couple of years back, that went up to 5%. Now I'm right somewhere around the 7 to 10% range, but obviously this is not intended to be financial advice.